Hello and welcome. I'm Helen Atkinson, Senior Editor at Supply Chain Brain. I'm excited to be moderating this webinar today, sponsored by SnapFulfill, the topic for which is Ask the Experts. High-performing 3PLs, are you moving fast enough? The e-commerce direct-to-consumer or D2C landscape is constantly evolving, and the best third-party logistics providers can adapt and change to meet market demands. But is it fast enough? Our Ask the Experts panel of top global executives in the 3PL industry will address the challenges of speed to value for their customers and answer critical questions about how they have successfully evolved. We're also going to provide tips for growing 3PLs and discuss key issues facing today's 3PL sector. Among the things you'll learn is the latest trends that are impacting the 3PL market, what high-performing 3PLs are investing in to differentiate themselves, how the expectations of 3PL customers are changing as they assess the value from 3PLs, guidance in responding to customers who are thinking that they can become a 3PL and do it themselves, and projections on where the 3PL industry will be in 3 to 5 years. I think that's going to be especially interesting. We're going to start with a panel discussion with our 4 fantastic experts who have a wide and varied experience of delivering 3PL services. After that, we'll move to a Q&A session with questions from you, the audience. Please submit questions at any time using the tab at the bottom of your screen. We will not be using people's titles or company names, so go ahead and ask anything you like. If you don't see your question answered during the webinar, please be assured the SnapFulfill team will reach out to you offline. Okay, let's get going. I want to extend a warm welcome first to Brian Kirst, Vice President of Sales and Business Development at SnapFulfill. Brian has 25 plus years of experience in supply chain, logistics, and digital technology. Prior to joining the SnapFulfill team, Brian co-founded and launched 2 high-growth 3PL order fulfillment companies. Brian brings his domain expertise in the 3PL sector to accelerate SnapFulfill's growth as companies capitalize on trends in that direct-to-consumer market. We also have with us today Ben Gordon, who is CEO at Cambridge Capital, a leading investor, advisor, and partner for companies in the supply chain and technology sector. Welcome, Ben.
Hi, Helen. Nice to see you.
Additionally, we have Mark Burrell, CEO of Moran Logistics. Mark and his team have built the business into one of the largest temperature-controlled warehouse and distribution providers in the UK. Thanks for joining us today, Mark.
No problem, Helen.
Nice to see you. Last but by no means least, we have Sean Foley, Chief Executive of the Contract Logistics Division at Oakland International. Sean is also Chairman of EORI UK, a subsidiary of the Oakland Group. That's the Economic Operators Registration and Identification Number, or Customs and Excise to you. He has worked in supply chain in both the UK and Europe, spanning a career in logistics of more than 38 years. So we've got a lot of expertise here today. Welcome, gentlemen. Thank you for joining us. And we look forward to a very informed discussion on what makes a high-performing 3PL. So with that in mind, I'm going to start our panel discussion so we can dig into a few key issues with our 4 experts. So I think this first question is for you, Brian. So the supply chain industry is top of mind and top of the headlines for businesses right now, particularly in the last 2 or 3 years. How has this changed what you need to do as a 3PL to be credible?
Yeah, I agree. Things have definitely changed in the last few years. It makes us all more popular at parties, for sure. Something folks never really talked about was how they received their packages and what was slowing things down. So I think for 3PLs and fulfillment companies, we're finding, our customers are a lot more sophisticated. A few years back, customers came to us looking for just the services of fulfilling orders or moving their products. And now they have a lot more requirements, and they're a lot more sophisticated and deliberate about what their needs are, which puts more demands on the 3PL. I think they're looking for faster implementation, and they're looking for more speed to value for their products. So I think one of the big changes outside of the obvious, right? All the supply chain challenges that you hear about and movement of products and it's the customers themselves have really educated themselves on everything from what our rates should be to what they should expect from their shipping and parcel providers. So it puts some real emphasis on the fulfillment providers to meet those needs and as they continue to change. So that's one of the big takeaways for me the last few years.
That's fascinating. And do you think that that customers have become a bit emboldened by the fact that supply chain issues are now a subject of discussion at cocktail parties?
I don't know about emboldened, but certainly, yeah, it certainly has made for some interesting negotiations over the years, especially during that COVID time when folks, the demands were up. The challenges were up, and that speed to provide services and get products in and out of warehouses, it was just at a fever pitch, and it hasn't really changed much.
Right, so they had to become educated because they were facing a lot more challenges, it sounds like. Ben, I'm curious about your perspective as an investor. It sounds to me, well, I'm curious to know, have 3PLs become a more attractive, more credible vehicle for investment over the last 2 or 3 years because of all this kerfuffle?
They have. It's amazing, Helen. If you look at, well, when you and I first met, if I hesitate to disclose how long we've known each other, but over 20 years ago.
Well, I think it was in the World Trade Center, so that tells you something about it. Yeah, maybe.
You're right.
Yeah.
So back then, you were doing great reporting, and I was running a logistics tech startup called Threeplex, a SaaS TMS company. And I remember, 20 plus years ago, logistics companies had a very tense relationship with technology because back then people viewed the internet as a threat. Every internet startup said, I'm going to disintermediate the middleman. And those of us in the logistics world said, wait, does that mean that you're going to try to put me out of business? And there was this misperception in the investment world that logistics companies were a bunch of lumbering dinosaurs who added no value. They were just intermediaries adding cost, and that the new internet companies were going to put them out of business. So certainly, if you were a private equity firm, you would think twice about investing in one of these lumbering dinosaurs. And now, 20 years later, I think we've all come to realize that that's not true. Mark Twain said, rumors of my death are greatly exaggerated. That's true of logistics companies as well. I think good logistics companies that add value are able to generate margins, differentiation, growth, and success. And the size of the logistics industry since then is about 5 times larger than it was then. And so it's a big deal. So yes, the category is very attractive for investors. I run Cambridge Capital, which is a private equity and growth equity firm focused on supply chain. We've invested in 9 companies, including XPO in the beginning, Ring and Last Mile, right? Reverse Logics and Returns, Green Screens and Predictive Pricing, and a host of others. And some of those are software companies, and then some of them are logistics companies like BOA and Cold Chain Logistics, Everest and Truck Brokerage. What they all have in common is growth, differentiation, and continued potential upside. And so I'm putting my money where my mouth is. We think it's a very investable category. And the fact that there continue to be major deals in the space. Look, just a few days ago, Kenco Logistics sold to the Pritzker private equity group. And, so look, the deal activity continues to be strong. And while everybody that, you read the headlines and be worried about stock market decline and financial pressures and the debt markets, the reality is that logistics has probably never been more attractive to the financial world and the investment community than it is now.
Fantastic, thank you, Ben. And I just want to come back to a point that you said. I want to get to the other panelists in a minute, but what was interesting about the attitude towards technology in the logistics market 20 years ago when we first talked, was that some of the operators, such as the ocean transportation companies, tried to build their own systems and avoid what were really the natural constituency for these enabling technologies, which was the 3PL community. But I feel like the 3PL community got shut out of the technology picture for quite a while and has now emerged as a much more natural place for good, enabling, connecting, platform-based technologies to exist. Would you agree with that? I don't know.
Yes, I would. And it's interesting because if you look at digital freight companies, right? I mean, you're talking about the ocean side of Flexport or on the truck brokerage side of Convoy. These companies marketed themselves as software businesses and raised money on very high revenue multiples. And yet, if you go and talk to the best operated freight forwarders like an Expeditors, truck brokers, C.H. Robinson or an Echo, they would tell you that they consider themselves every bit as digital as those so-called digital brokers. These are 3PLs that are investing billions of dollars a year collectively in technology to automate the business, to integrate, connect with customers, provide tracking, visibility, and a host of other capabilities. So yeah, I would say that the logistics companies of today are highly technical, have significant engineering capabilities, significant investment. And that's why in a world where, while it's true that the digital companies are changing how the game is played, right? I think if you were a truck broker 20 years ago, your average gross margin might have been 20%. Today it's 11 or 12. Okay, so the gross margins are going down, but guess what? If you're doing a better job of using technology and you're using systems, whether it's a great TMS or a great predictive pricing company like a Greenscreens or another, your ability to keep more of the bottom line because the cost from your gross margin to your net income has actually gone up. So yeah, smart logistics companies that are using technology more aggressively and effectively have probably never had it better.
Right. Wonderful. Thank you, Ben. That's great. So I want to talk to Sean now. How do you feel you've come on as a technology or a technologically enabled 3PL over the last few years? Has that been a significant change? Has that been a huge investment for you?
Alan, I think in terms of investment outside of obviously the most important category, which is our people, I think technology is certainly number two. Mm-hmm. The ability of us as an organization to be able to interface and deal with complex demands across a broad range of services and propositions. I mean, we have 14 different propositions in our organization now. Mm-hmm. 7 years ago, we had 3. And those, and that speaks for itself. So those 11 have been predominantly sitting around technology. So at one extreme, in my capacity as chairman of our Yori business, we do transactions on behalf of Her Majesty's Revenue and Customs, and we handle multi-million numbers of declaration transactions, which is moving substantive amounts of fiscal pounds without having technology at the highest level.
Forget it. Yeah, right.
Forget it. So it sits in a world where, when I came into the industry, it was just about emerging. Today, it's bread and butter. If you're not at the head of the pack in a technological sense, and you haven't got your own team and you haven't got good partners, then you're out of the game.
Right. Wow. Yeah. So it's a must-have. Mark, thank you, Sean. Mark, where are you with technology and investments and prioritizing technology?
Well, whilst Sean and I are in competing businesses in some ways, we talk separately and we engage, and I watch closely what Oakland's International are doing, and I know Sean sort of looks at what we're doing, because he's exactly right. Investment in technology, despite all of the financial challenges over the last 2 years around Brexit, pandemic, cost of everything going up, we've had to keep the focus on investing in our technology, because Sean's exactly right. You've got to be at the forefront of this. You've got to be leading and constantly challenging the way you do things. I think it was Ben who said, that's the way now you can protect your margins. The cost of everything's going up. not all of those costs can be passed on to your customers. So you've got to be making things more efficient, and technology is one of the key ways of doing that.
Right. And it sounds like, I'd be curious to know what would all the 3PL folk here have to say. It sounds like it is part of the credibility package that, I mean, Brian, do you get customers initiating conversations early on, potential customers asking about your technological capabilities as one of their top priorities, or is that usually a conversation you need to initiate?
No, that's initial discovery these days, and I think to echo the points of the other panelists, that there was a time where it was taken for granted. Your technology was something that was a little lower on the priority list. Now it's part of initial discovery with a new customer. What are the technology requirements, and not only that, but what technology are you going to provide to them? Data becomes a huge piece of this as well. Access to their data. And how that translates into their systems, and then labor as well. Labor is another resource that everyone took for granted until these last couple of years. And if your technology isn't allowing you to maximize the resources you have within your operation, or augment that with technology, you're going to quickly fall behind and not be around for very long.
Right, sure. Well, let's talk about labor, because that's really a hot topic at the moment. And I think it's one of the current trends. Labor shortages are one of the current trends that are really impacting the 3PL market. Mark, could you talk a little bit about, I mean, you're in the UK, which, I think is heading into, or already has hit a recession sort of ahead of the US. How's that impacting the labor market?
Well, I think we've been having challenges in the labour market for 18 months now. There was a severe driver shortage caused by Brexit, pandemic, a change in legislation called IR35, and that impacted drivers. That also then, following the pandemic and all the challenges everyone else had, hit the warehouse side of the businesses in logistics. Right. So we had drivers, we've had warehouse, and now when you drive around the UK, every business you pass has got a sign at the front saying hiring now. So that's the reality. And we've all had to develop and adapt to that, because that's just become the norm. There is this war for talent that people have talked about for a number of years. It's just got more and more challenging. And we've all had to adapt in the way that we develop our people, the way that we reward people in numerous different ways. But we've also had to adapt technology to make our reliance on people that little bit less and make people's jobs that little bit more enjoyable.
So are you talking about automation and robotics, or what sort of things are you talking about, Mark?
So we've talked about things like wearables in the warehouse, being able to scan 10 items where you'd normally take the time, you'd be scanning 3. So really speeding up that efficiency in warehouse operations, but making it more technology led. And that's also then driven much better data, which leads into the customer expectation side of things that I think Brian was talking about. Customers talk about that as one of the first points of a conversation in a sale now. So you're developing the staff, you're dealing with the labour shortages, but you're also meeting your customer demands. And that only comes by investing and continuing to focus on technology.
Are you, Mark, are you using any gig workers? So have you gone over to that? There's a lot of talk of that in the US right now.
No, so we're not using any gig workers necessarily in our business. The requirements of what we do, it's a very fast moving product. It needs people that we can bring in who know what they're doing. You have to have an element of flex through standard agency models. We've got our own agency, in-house agency that deals with that. So we have to have that ability to be able to flex up and down really quickly. And that's something that we've been very successful in doing in the last couple of years.
Interesting. And I imagine the temperature controlled aspects make it a little bit more specialized and harder to train people.
Yeah, and harder to keep people. You're asking people to go and work in a fridge for 11 hours a day, and to move basic commodity products like milk, like chicken. So some of the fastest moving products, because they've got the shortest shelf life. So they have to be dealt with sensitively, but really quickly as well.
Sean, what about you? Are you using any gig workers? How are you doing with dealing with your labour shortages?
I think at tier 1 level, we're looking at a number of projects at the moment in terms of automation, robotics. The challenge with robotics and automation is not so much the fact of does it work or can it be procured. You just need strong contracts to support the capital investment that is required for that. And in the UK, I don't know if this is the case in the States, but in the UK, it is really challenging to get contracts that are longer than 3 years. And when you're talking above 3 years is very rare. Then when you want to invest big time in automation, you're talking tens of millions of investment. So at tier one, we'll be working on new robotic systems with some big operators, retailers. At the today level, we employ just short of 1,500 people. And of that 1,500 people, we would normally be operating about 6% of that would be what we would call flexible agency.
All right.
And the reason for that is that as Mark has set out, we work in day one for day two. Sometimes it's day one for day one environment, fast moving consumer goods, and under temperature control conditions, and it's food. And therefore, the volumes are changing every day because it really depends on customer demand, and that depends on consumer habits. And that is a very challenging prediction forecast when you're dealing with probably 60,000 delivery points like we do every day. So, you know, to blend that in and to deal with that with, shall we say, human beings is what we do. We knit complexity together and come out with a good outcome. And we use, and then going back to your original question, Helen, we use technology to deliver that.
Right. Fantastic. Thank you. Thank you,
You're
Sean.
welcome.
Brian, what about you? How are you addressing labor shortages and trying to knit these things together, as Sean said?
What we're seeing more of here is that, you know, some disruptive technologies to, you know, the typical temp labor and temp agency approach to staffing warehouses. So you're seeing more gig type of approach to augment that. But management of labor and that data of where you're utilizing that labor within the warehouse is becoming more and more important. So, you know, that those performance metrics, utilization, which then doesn't only question how you're utilizing your labor, but also are your processes right? So having the technology to identify where there's challenges with labor or challenges with process is very important. So having the right tools, and it goes back to data again, having systems that generate the right data. How long is it taking to do specific tasks? You know, how long are operators traveling within the warehouse? Those type of things become extremely valuable when resources are scarce.
Sure. We keep coming back to this ability of technology to make everything a little bit more efficient, including using the labor that you have. Ben, where would you put labor shortages on the list of key trends in the 3PL market, and what are some other important ones that we should be paying attention to?
Well, it's definitely a top 10 issue, and it's interesting. Labor shortages are fueling pretty aggressive investment in technology because, you know, the robots don't go on strike. The robots don't ask for more benefits. The robots don't ask for more, more special treatment. There are a whole host of reasons why I think we're seeing more and more investment in automation, whether it's in the warehouse or elsewhere. But it's one of several. What are some of the other themes? Well, I think one is the continued growth of e-commerce, which has a whole series of ripple effects. So, and the way we think about it at Cambridge Capital, we start with the big macro themes that we think will drive growth over the next decade. So e-commerce, clearly one. I'm not sharing anything brilliant pointing out that e-commerce will continue to grow. But the interesting thing, Bill Gates said that we often overestimate the importance of a trend in the short term and underestimate it in the long term.
Sure.
And e-commerce is one of those long-term inexorable trends. So as you look at this massive growth, which was accelerated by COVID, the more people buy online, the more a whole series of downstream logistics needs emerge. One is e-commerce fulfillment. Okay, I buy something, then there's a fulfillment center, pick, pack, and ship, and so fulfillment companies benefit. Two is the tracking, the visibility. I want to know where's my stuff. 3 is the last mile logistics delivery, so it gets to my house as quickly as possible. You know, a 2-hour delivery might not be sustainable, but same day is certainly here in major markets to stay, right? And then 4 is returns, because 30% of what gets bought online gets returned. So each of those 4 areas, there's tremendous opportunity and growth. Now, you don't have to take my word for it. I mean, we've been putting our money where our mouth is. So for fulfillment, we invested in a European logistics software company called Bird. For tracking and visibility, another company called Parcel Perform. For last mile, Bring and Delivery Circle, and then for returns, Reverse Logic. So, you know, we think that the growth of e-commerce produces all these downstream logistics opportunities that are enormous. And that's an opportunity for us as investors, for logistics companies that are looking to add differentiation and margin, and for end customers that are looking for a better experience. So I think that's a pretty important long-term driver of growth.
Great, and I love your Bill Gates quote, because you're quite right. I mean, e-commerce is depending on the vertical, it's still only around 15-20%, I think, of total sales. So there's a temptation to let it be the tail that wags the dog. But I think in the long run, it is certainly not going away anytime soon, and it does present a lot of challenges. So let's talk about clients, 3PL customers. How have they changed over the last few years? Mark, I'd like to start with you. What changes have you seen in your clientele lately?
There's a few changes, but probably the biggest one that stands out is the amount of flexibility that customers demand. So you've talked about labor shortages and the developments in IT, all from a logistics perspective, but each one of our customers has had those exact same challenges. They've got pricing challenges, they've got labor challenges, and they've got their own technology challenges. Right. And as a result, they come to the 3PLs to look for solutions to help them meet the challenges. And we've had to be much more flexible in working with our customers to enable us to meet those demands. So a lot of that has come around closer partnerships, increased understanding. I mean, we even took the step of offering some office space on our biggest site to one of our biggest customers. So they actually work on site with us. That's how close the partnership is. So we can we really understand each other's business now, because that enables us to help each other in lots of ways that we maybe wouldn't have done before these challenges all started to come to a head.
Interesting. So are you generally finding, Mark, that you're more involved in your customers' businesses?
Yeah, it's become the partnerships of more through the external dynamics than a strategy to do it, but it's really crunched the businesses together, because 3PL, we become an integral part of the supply chain that our customers have. So getting food in the UK, for example, from production facilities into retailers and onto the shelves and then into customers' houses is a huge part now. The 3PL plays such a huge part in making that happen that we have to work in really, really sort of close, holding hands type relationships with our customers.
So can you give me an example, Mark? I don't want to put you on the spot too much, but can you give me an example of something that you do for customer now that you didn't do, say, 5 years ago, whether it's packaging or scheduling or whatever?
So one of the biggest things that we do for our customers now is we made an investment in our WMS, and we used to have an off-the-shelf WMS that was, this is what it does, you need to work in these ways. We've now spent lots and lots of hours, lots of money, lots of time with our WMS partner in developing a system that has things that specifically meet the needs of customers. So we've really bespoked the system to what customers need. Whereas in the past, it was a lower cost option to give them something off the shelf and say, that's what it does. You need to fit around us. But we've worked with the customers to understand the needs in much more detail. And then we've really tailored the product to meet those customer needs. So it comes at a cost. You have to invest in those things, both financially and with time. But that's really sort of proved to be a differentiator for us in the UK.
Fascinating. Okay, and back to technology again. That's exactly. So interesting. Sean, tell me, how have your customers changed over the last few years?
Well, as you started off, Ellen, I've been in the industry 38 years, and I'd say the nature of the senior executives that I deal with today as heading up my customers are more scientific, more mathematical, more savvy, more commercial, more challenged. and in some ways, the whole industry is gone professional. You know, it wasn't professional 38 years ago to this level.
That's interesting. Sounds like, Brian, you are nodding and agreeing there. Tell me your perspective on that.
Yeah, I mean, to you know, expand even and agree with some of what Mark was saying and Sean talked about. That sophistication that I mentioned earlier, that's one of the big areas. But to service those customers, you have to be willing to partner. There was a time when the logistics provider could determine the process. The customer had to fit the process of their provider. That's not the case anymore. You really have to be flexible, and you have to have the systems available to allow that flexibility. Forcing a customer into a process is no longer an option. You really have to start to flex and change based upon your customer's needs. And those needs in the rapidly changing 3PL world, at one customer, what it looks like at the point of signing a contract to what they look like 6, 12 months down the line could be dramatically different. You see people go viral, you see things change, or they get a big, you know, they're a D2C, they start as D2C, and then they get a contract for a large retailer. And now they have retail compliance needs. You really have to have the systems in place and the expertise to cater to those needs and to service those needs. But you have to do it as a partner. Customers are not looking for vendors; they're looking for partners, especially on the fulfillment side. And so that's one of the areas from the customer side that I've seen change from when I started my first 3PL, which was really based upon exiting a situation where we saw customers come in, get forced into a process and have to leave. We created our first business model on catering to customers that required high touch. So.
Right. So it sounds like the P in 3PL should start standing for partner.
I think it should, Helen, but it's
I just came up with that. You know.
Brilliant. It's important, Helen, as well, though, that we have partnerships with suppliers. So we've built strong partnership with customers, but one of the strengths of what we do is also have key partnerships with suppliers, because they're so important to us as 3PLs. So I have a select partner. We went through a rigorous procurement approach when we decided on who we wanted to partner with for a WMS. And I have the same for my tire supplier, the same for my vehicle supplier, because you don't have time to do that procurement exercise on a regular basis, or the need to go out and find who's going to repair your vehicles. You have to have these strategic supplier partnerships that enable you to then service your customers. So that's equally important from a partnership perspective. Right,
fantastic. And then just I would like to get each of you to tell me a little bit about how you deal with it when when you see particularly large companies decide that they can do this 3PL thing all on their own. Is that a growing trend? Is it a concern, or is it just such a slam dunk what you guys do that you can shrug it off? Brian?
Everybody wants to do it, right, guys? It's attractive to a large retailer or a larger company that has excess space to want to monetize that and create revenue centers out of their cost centers. And the logical way to utilize warehouse space is to provide services. So I think it's just the nature of how things are evolving. What you see happening is those larger organizations are pretty rigid in what they have in place. So they do need to augment and look for more nimble, more flexible systems to provide those services that a traditional fulfillment center or fulfillment provider, 3PL, is providing. So whether they're doing that through acquisition of other companies or implementation of software that's more flexible than what they have built to cater specifically to their business.
Yeah.
We're seeing that more and more. So especially from our side, you know, the technology side, larger retailers, larger companies that are first party are looking to augment their current tech stack with much more flexible systems that then they can use to enter the 3PL space. So I don't look at it so much as a threat or anything of that nature. It's more of the natural evolution of how to utilize underutilized space. And for traditionally brick and mortar retailers, they have a bit of that going on right now.
Right. Thank you. We're getting a lot of questions in from the audience, so I'm going to move this along a little bit and go into our Q&A session, because I'm very curious to know what we're getting from our attendees. Once again, please submit your questions using the tab at the bottom of your screen. We will not be using people's titles or company names, so feel free to ask anything you like. If you don't see your question answered during the webinar, please be assured the Snap Fulfill team will reach out to you offline. So we have a lot of interesting questions now. And I think the first one, hang on, I'm just going through. So I think, oh yes, there's a question here about WMS systems. Let's dive straight into details. Do you observe any changes in terms of demands and requirements from the WMS system, i.e. support automation or create customized reports? I'm going to imagine the answer to that question is yes. Mark, do you want to kick us off on that?
Yeah, of course. I spoke earlier about the demands of my customer and how we tailored the system to meet what the requirements were. That tailoring involved the levels of support that we needed. It involved bespoke reports, as well as flexibility in what the system can do and the data that it then drives. So we've really had to tailor the systems to meet customer demands. So yeah, the WMS has to be flexible to do that. And that's been a big part of our journey with all of our new warehouse management customers in the last sort of 18 months.
Right, and I've got another supplementary question here that perhaps Sean and Brian can answer. Why are there so many warehouse management services out there, and how do you choose a good one? I think that's a very long discussion, and we probably need to take that offline. Let's move it. So let me move on, because I want to get to some of these questions. This is one for you, Ben. How can 3PLs work with investors to grow and attract more customers?
So and I thank you for that question. If I'm a 3PL fulfillment or some other area of logistics, and I want to attract capital so that I can do more for customers, well, I'll tell you the things that an investor cares about. So one is, do you have a strong foundation? Are you growing? Do you have happy customers? Are you providing a service that's differentiated? And then do you have a good reason for capital, right? Like if you had an extra $50 million, is it clear what you would do with it? You know, are there areas where you would grow, acquisitions, or areas that you invest in, or new services to add, or additional locations? I think that's a classic scenario. For instance, when we invested in BOA Logistics and Cold Chain Logistics last month, BOA specialized in LTL consolidation for food brands. So if you were a food brand looking to ship to restaurants or warehouses, distribution centers, etc., BOA specialized in that and does a great job for that. But they're in LA, and they had one clear idea, which is, hey, it'd be great to expand. How about Northeast, Midwest, etc.? So capital for expansion was clear. A second was to continue to invest more in technology, and whether that's a WMS, kind of a topic of Q&A here, or visibility or integration or a host of other things. There are technology moves. Third is acquisitions, and as is often the case in logistics, if you build more network density, then first of all, you can serve your customers better, you can deliver faster, and then you can boost your margin. And if you choose to keep it or lower your price and give some of it to your customer, you benefit from it. So I think what BOA did is a pretty good example of that. Let me give you an example of what's a bad reason. I had a conversation. I'm here at a logistics conference at FreightWaves right now, and I met with a company that said, well, we don't want to bring on capital or sell right now because we're growing too fast. That's an interesting comment, right?
Nice.
Because, you know, it implies that, oh, well, if I'm not growing fast or I'm doing badly, then that's when I want to sell or raise capital. Of course, that's the time when no other investor would be interested. Nobody wants to catch a falling knife, right? So I think smart companies really need to be able to balance two things. On the one hand, you know, they don't want to, quote, sell too soon or raise capital too soon, knowing that they think their business is 50% bigger next year than they're going to be worth more. But on the other hand, if you sell or raise capital when things are bad, nobody's going to be interested. So the balancing act is smart companies really, on the one hand, need to be able to showcase why they're doing well and will continue to do well, and not be too fixated on the fact that they're leaving a few bucks on the table because maybe next year will be better, maybe the year after that will be better. Instead, the question to ask, it's not, will next year be better? It's, how much better off could you be if you had a capital partner? In other words, if you had the access to money and then maybe other resources, maybe your 30% growth could be 60%, or maybe there are other benefits. So I think just being cognizant of that is important. So that's the advice that I would give to a logistics company thinking about talking to investors.
Great. Thank you so much, Ben. That's really interesting. I have another question here. I'm not sure who wants to take this. How have you changed your ROI targets on technology investments due to the change in the landscape created by labor shortages? I know we touched on this earlier a little bit, but I'd like to dig into it a bit more because this has really been a hot topic over the last few months. I've been writing a lot about it in Supply Chain Brain, and the whole balance between technology, including automation and robotics, but also warehouse management systems and labor management systems and human labor has been very interesting. It seems like quite a delicate balance. Sorry, that was a long introduction. Brian, could you talk a little bit about that, about how ROI targets on technology investments have changed specifically because of labor shortages?
Yeah, I think ROI has always been top of mind for 3PLs investing in technology in the warehouse, because that's where we drive most profit. So, even a little bit different than a first party or a brand investing in their operation. So the conversations that we're having when we're interfacing with potential clients from the software side, 3PL clients specifically, ROI comes up earlier in the conversation and more often than I've seen in the past. And as an operator of a 3PL, yeah, when we look at technology, specifically technology that directly impacts labor, and processes within the warehouse, so WMS being one of the biggest there, or the biggest, ROI becomes the key point. So how quickly can we implement? How quickly is that implementation and that WMS going to impact our labor savings and our efficiencies? That all becomes a big question, and we want to shorten that ramp up time as much as possible. So yeah, I would say it's a huge conversation right now.
Right, Sean, what about you? Have you ramped up your ROI expectations because of labor shortages, or is it just always a priority?
I suppose my priorities have changed over years, being headed up a PLC for many years. In the PLC world, ROI was, top of the list, and it drove policy, it drove decisions, that coupled with EBITDA, of course. In a private business, like I'm involved with an owner of now, it's slightly different. ROI is more about, we call it capital for legato, we call it legacy investment. It's an absolute must. If what is the ROI? If we wish to grow, which we do, and we're growing every year, and we cannot get people, we have to have a sensible attitude towards using the cash that we generate to invest in capability that limits our risk. And therefore, what does ROI have anything to do with that? It's absolutely survival of the business. To have technological solutions to replace, unfortunately, human beings. So from our point of view, we take a very, very long-term view, which I worked with the Japanese for many years, and they had a really good catch on this. They took a long-term view about such things, and so do we in our organisation. As I say, it's called the Garton capitalisation in our business.
Mm-hmm. Fantastic, thank you. And Mark, tell me about your attitude to ROI and whether it's been influenced by current labour shortages.
It's very similar to the answer that Sean gave. I work in a business that's not a PLC. It's owned by an entrepreneur, and very much it's about investing in the long-term future. So advice that I would always give to people who are working in 3PLs is to look at their investment strategy, look at what they can afford, and look at how they're going to pay things off quickly. So when we make investments, we're not necessarily looking at the ROI. We're looking at what that will do for the business over the next 5 to 10 years. So how will it help me bring in new customers? What will it help me do with my cost base? What will it help me with challenges like the labour shortage? So we don't particularly measure ROI in the traditional sense in a PLC. We look at it as is it a solid investment for the business, because we have to make the right decisions on where we spend our money. Every year I've got to buy new trucks, I've got to buy new trailers, I've got to invest in my people, my facilities, and IT is just one of those investments that we need to make sure that we continue to sort of put some money towards.
Fantastic. Thank you so much, Mark. Just getting some more questions in here. Here's a bit of a wild card. I'm a college professor in the area of supply chain management. What skills and knowledge are you looking for in new hires? What are the biggest employment opportunities for new graduates? Sean, what are you looking for in a new hire, fresh out of college? What would be your ideal list of skills and interests?
We have a policy of taking on graduates every year. And the first thing we look for is obviously capability, and intellect is generally a given. I think it's attitude and drive. I think anywhere in the modern industry, whether you're in logistics or banking or, wherever you sit, I've always said you can develop people's skills, but you have to carve the commitment and ability and their drive unless they've already got it within themselves. Mm-hmm. So, we will always look for that. You have to really want to do logistics. Logistics is not a 9-to-5 job. It's not a Monday to Friday job. It's a role that you have to be committed to. And we probably do 90 interviews every year. We end up with a dozen graduates. And of those, probably 35% do not last the first 3 months. So the vetting process is really important. They need to know what they're getting involved with. They need to put on a jacket and go in the -25 degrees freezer. They need to understand that you can only learn so much through, education. Education starts the minute you start your role. But in saying that, Helen, we have a policy called Brathe, which is a development program with graduates. And I'm pleased to say that we had 5 of our graduates who started 3 years ago, just before COVID, who are still with us. And 3 of those 5 are key senior managers now in the organization, which for me personally, at a personal level, that is what my responsibility is. I'm coming to the end of my career. They're the future of the industry. It's great to see.
That's fantastic, Sean. I'm curious also, do you also look to recruit direct from high schools and younger people who don't have graduate degrees?
Well, indeed. I mean, I started on the Liverpool docks at 15 years of age. And, in my lifetime in the industry, I've run a business of 2.5 billion, with 16,000 colleagues. So, you never really know where the talent is. Yeah, you just have to mine it, and you have to be open-minded. Yeah.
So your vetting process goes across all of those.
Absolutely.
Yeah, that's really important.
Yeah.
Thank you, Mark. What about you? How do you hire the right people?
Well, as I said earlier, we have our own recruitment business.
Right. Yes.
But and we utilise that. We're constantly searching for the right people. Having the right people in the right seats was my mantra when I joined Moran Logistics. I've spent lots of time in the parcel sector, working for companies like TNT and then FedEx. That was my background. And there was a big focus on investors in people. And I moved into the cold chain sector, and it didn't feel like there was the same focus and value placed on people within the sort of temperature controlled sector when I moved into it. So I was keen that we really raised the standards and started to focus on bringing the right people and putting them in the right seats, and then giving them development. Because Sean's exactly right. What you've got to do is get the person with the right attitude and approach within logistics, or they simply come in the door and they're gone again. So we've widened our net. We've worked with high schools. We've worked with within our own graduate program. We've looked at lots of different angles to bring people into the business, because of the labour shortage has probably driven more of that behaviour. But it's all about then getting them through the door, supporting them, and making sure that they've got the right attitude to stick with logistics. Because as Sean said, it's hard work. It's rewarding. I wouldn't go into any other sector. I love logistics, but it is hard work. You've got to live and breathe it to get the most out of it.
Oh, that's great, Mark. Thank you. That's a very positive answer. Brian, what about you? What's your philosophy on recruitment?
Yeah, I would agree with Sean and Mark on the point that you definitely have to have a passion for the space, for logistics. It's definitely, the higher performing folks, it's not for everyone. You have to have a bit of a thick skin, and you have to be willing to get your hands dirty a bit. It's not the glamorous portion of the business. But it can be extremely rewarding. So when looking for folks who excel in the logistics and fulfillment space, being creative, being open to really trying new things and thinking outside the box. Those are key areas, all while paying attention to the financial aspects of the impact of your decisions. So, being a leader and a decision maker was always something that we looked for in our teams. Like someone willing to take a chance to service customers was a big deal for us. But you do have to have a passion for it. Having been in as long as I have, and the other panelists, it's definitely an area that you have to love.
Great.
A lot of people, Helen, a lot of people don't really know when they're coming out of college and university or high schools, they don't know what logistics is.
Sure, I was going to say that. Yeah, how do you know you're good at logistics if it's not like you do a course in it at high school.
Exactly, most people don't. So there's an initiative being run in the UK at the moment called Generation Logistics, and I would recommend anyone who's interested or wants to know more about logistics to log on to the website Generation Logistics. It's really telling young people what it's all about and telling them how exciting a place it is. We're here talking about technology today, and anyone who's interested in technology, some of the fastest advancements are happening in logistics. So have a look at that website. It really is interesting and gives younger people an insight into what logistics is all about, as well as giving them the opportunity to apply for jobs live through that website. So it's a good way in, a good way of building that understanding.
Thank you. That's a great point. Thank you. I will definitely be checking that out, because I have young relatives in the UK who might be interested. We've got a technical question here about WMS, and I don't think we have time for it, but I just want to let Achal know that we will definitely get to you about WMS offline. We're really running short on time, and we only have time for one more question, which is the big one, which is for Brian. Brian, what is the one thing that you've done that's enabled you to be successful in the 3PL space?
Yeah, I think, in both of my experiences of launching 3PLs, the one thing we did that really set us up for success was in choosing the right core WMS functionality. In our case, it was Snap Fulfill. That allowed us to be somewhat commodity agnostic when customers were coming into us. So it gave us flexibility to really write our own rules, really set us up for success. And it gave us best-in-class core functionality. So we were able to take that best-in-class WMS and then integrate other best-in-class systems to offer that full tech stack to our customers. So labor management, order management, transportation management, being able to integrate that all into the core WMS gave us the flexibility, the efficiencies we needed, and it really allowed us to control our destiny and keep up with the changing demands in the environment, that we had. In one instance, we started at the end of 2019, and we went right into COVID. So being able to really address those needs and changing needs of the entire market and industry was key, and having the right technology at the core to allow that to happen was really what differentiated us and allowed us to grow so rapid.
That's fantastic. That sounds like more than one thing, but all very good. No, and again, we keep coming back to this, the way that you have all been brilliantly harnessing the capabilities of technology to make things more efficient and make you more flexible for your customers. That's fantastic. I'm afraid that's all we have time for today. Thank you to our panelists, Brian from Snap Fulfill, Ben from Cambridge Capital, Mark from Moran Logistics, and Sean from Oakland International. And of course, and a special thanks to all of you for participating. Thank you for making the time. I hope you found this interesting. I think we've learned a lot about how 3PLs are moving faster to adapt to their customers' ever-changing needs. We had a lot of questions today, and we'll be answering the ones we didn't get to with you offline. You're also going to get an email later with a link to view this webinar on demand, and you can share that with your friends if you're interested. And there will be information also about how to visit Snap Fulfill's website and how to contact Snap Fulfill if you have more questions. Thanks so much for your participation. Stay safe, stay happy, and enjoy the rest of your day.
Thank you.
Thank you.
Bye.